This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, May 9th, 2016. Euro dollar. So the euro is showing signs of rolling over after stalling out by recent 2016 highs at 116.17. The market has also stalled into some critical medium-term resistance up into the 115 to 117 area, which suggests that we could see a rolling back over the coming days and weeks. But at this point, key support now comes in at 112.17, and a breakback below this level will be required to strengthen the bearish outlook and accelerate declines. Inability to take out 112.17 will keep the pressure on the top side. Sterling dollar. So cable has recently stalled out into rallies above 146.70, which is some key short-term resistance, and the inability to establish above that level does suggest that the market remains pressured to the downside and could see deeper setbacks over the coming sessions. At this point, we're going to need to see a breakback above last week's high at 147.70 to really take the official pressure off the downside, while inability to do so will again keep the focus on the downside, potentially for a move all the way back down towards the 140 area, below which would expose that recent 7-year low at 138.36. Dollar yen. So dollar yen has done a good job at rebounding from recent multi-month lows just shy of 105, with the market trading back above 107 thus far. At this point, we could still see additional corrective activity, although overall the downside pressure remains firmly intact, and any rally should be very well capped ahead of 110 in favor of the next major downside extension towards and below that psychological barrier at 105. Ultimately, only a breakback above recent highs at 111.89 would take the pressure off the downside. Euro Swiss. So impressive gains for Euro Swiss in recent trade, with the market taking out some key resistance at 110.62 and now opening the door for a fresh upside towards a retest of the recent multi-month highs at 112 further up. At this point, any setbacks should continue to be very well supported towards the 109 area, with only a breakback below 108 to really compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has seen a nice reversal over the past several days after the market put in a fresh 2016 high at 78.35. Setbacks have now accelerated, with the market trading down towards the 100-day moving average. At this point, look for a close below the 100-day moving average to confirm this shift in the structure and accelerate declines. However, inability to take out or establish below the 100-day moving average will suggest that we could still see additional upside before the market considers moving lower again. Dollar CAD. So dollar CAD is showing signs of a formidable base after trading down towards its 2016 lows just under 125 at 124.61. At this point, there's risk for this correction to continue and develop into something more meaningful if we are able to establish back above recent highs at 129.90. So 129.90 is going to be the key level to watch over the coming sessions, while any setbacks should be very well supported down towards the 127 area. Kiwi dollar. So Kiwi has come back under pressure after recently stalling out just shy of the recent 2016 high at 70.54. At this point, the pressure remains on the downside, with the market now focused on a retest and break of key support at 67.59 further down. A break below 67.59 will accelerate declines back towards 65.46. At this point, look for any rallies to be very well capped towards the 70 area. SPX 500. So the S&P 500 is showing signs of topping out and failing again above 2100 in 2016 after doing so after record highs back in July of 2015 and then a lower top just below there in November of 2015. Again, another topside failure above 2100 does suggest the market could see significant declines in the days, weeks, and months ahead, but it's going to take a break back below 2020, that low that we saw, that area, 2020 area, that low that we saw back on the 24th of March to confirm or strengthen this outlook and accelerate declines. Only back above 2112, that 2016 high, would give reason for concern and compromise this bearish outlook for the S&P 500. Gold. So gold has mostly been consolidating in recent trade, though ultimately the market is seen breaking higher back above the 2015 peak at 1307 and towards 1400 further up. Look for any setbacks, if we do see any, to be very well contained and supported towards 1200, while ultimately only back below 1190 would compromise the constructive outlook for gold.